morning. Welcome to another ES Futures trading stream. Today is Thursday. It is 8:4. My bad. It is 9:28 a.m. Eastern time in the US. We have just had PPI month over month. Which is extremely high, man. The consensus was 0.2 and now the actual was 0.9. The market is set, or was set, to open with with a gap to the downside, quite the opposite of yesterday. Let me open this profile. Settle. We have settled at 64.88.75. 64.88.75. Way up here. Alright, the market did not open with a gap. Market open, and this can be a big thing here. Market did not open with a gap, but it has this low is extremely questionable down here. Just remember what we have down below. I'm going to extend it all the way up to here and make it like that. This is very questionable low, my friends. We may actually see I will check this distribution here. Notice where this distribution close from yesterday. This is X, man. That's a good. This is a good. The market is out of balance here. Inventory is overall inventory is short. We may see something here. I'm not seeing there's a rebalancing here. Volume is very low. We have some buying yesterday late in the session. I mean, the most important thing for me right now is where this market open relative. Relative to yesterday range. Either probable. Now this low now is being corrected. We have excess now in the downside, but we still have this extremely weak 60-50 areas down here. 55 and potentially maybe an ultimate destination. If the market has down some continuation below this area, we can see the market trading maybe towards this side here, or maybe even to this area. Do you remember what happened this day when the market was pushing lower after Trump news? There was significant buying here in this area. I'm not saying it's going to go down there, right? But that's I had to see something that this one here is the break that we have. This is a downside spike we have after PPI. A really bad number there. Significant buying here. I mean significant selling here. It's just crash the market. There's a flush here, and there's some buying this red high volume, which is actually high. It is around this area, and the market is opening inside the spike. It didn't open below, which would have been a really weak sign, and a sign of weak market here. It didn't open above, which would be, a sign of rejection or low prices. It opening inside. Opening inside spike is one of the trickiest developments that there can be, man. That's not easy. Yesterday was not an easy day. My appreciation of the market is the market was making new highs, but the last thing I want to do is short this market. I don't want to short this market just because the market is high. As the day developed, value never came back inside. Not at least overlapping. It always was higher than previous day. Right now we have value overlapping lower. But remember, this is just the first 5 minutes of this period of the market, of the opening, from the opening. This one has been corrected. So now we have an excess. We have an excess now. We have an excess in the lower side. But again, if I open this, I'm going to open this profile here. Look at this, what we have here. We have 4 wide here. 4 wide lows. 4 wide low here. We have 3 wide low here. 3 wide low here. Okay, and this can be key today. This one here. This reference here. Also, if the market doesn't do anything regarding that, that's also a sign, right? Now we have another distribution close, which is very important as well, which will be this one, and this is from this overnight. Okay, this is the late rally high. Okay, this is late rally high from yesterday. What the market does relative to this high here, this one here, that also is important here. I'm going to keep this one open for a moment. I'm going to see if there's anything going on here as well. Yesterday I was aware of the market making a new high, and I stated that the last thing I want to be is short, right? But it wasn't a market with confidence. The market has no confidence yesterday. The advance that we have here really didn't have outside continuation. The market was struggling in these periods. I left. I think I left when B started, or somewhere inside B. I didn't come back until late in the session. And I noticed the market was going higher here, but with this low right? The trade was to the upside, but with this kind of loss, man, that's something I don't want to do. I didn't. It's just not worth the risk having a long here. The trade was to the upside, but the risk was high. Today, I also think the risk is high. The tone of the market, I still don't have anything here, but some clues, right? Some pieces of information are hinting this can be a day to the downside. The tone of the day can be to the downside. But I have to wait for an opportunity if that's the case. And if the market shows otherwise, so I got to change my mind. Because the market doesn't follow what I say. I have to fit what the market is doing. This is Nasdaq, tremendous POC during the overnight. This kind of POCs have the tendency to attract the markets back and forth. You know, to be very wide, very prominent overnight POC. Look at how thin this market is, man. Look at these printings. There's a lot of voids here in this period. If you trade Nasdaq, you know, just out of curiosity, I want to know why you trade Nasdaq. Because there's a lot of people who trade Nasdaq. I'm not saying you shouldn't. I am just curious. It's out of curiosity. Okay. How many times traders just wanna trade right away? And the market is open. I am going to miss the opportunity here. I am going to miss my long, miss my short. The market is going to break. I have to be short. The market is going to rally. I have to be long. This is a little distribution here. Notice how this is an accumulation. I mean, this chart shows overnight and little trading hours. There was a distribution here during this overnight that the market actually didn't touch, right? Now we have the same shape, not the same shape, the same kind of like this is a spike to the upside, and today we have a spike to the downside. The market never came back actually to deal with this inventory here. The same dynamic is happening here right now, but this time to the upside, I mean to the downside. Right, there is a spike to the downside, and see what happened here with this distribution now from the overnight. Okay, these distributions have been relevant in the last couple of weeks. I have seen a lot of back and forth buying and selling from these distributions closings. And this is what the heck? This is all-time high, and we now have an all-time high. It is a good all-time high though. This is a good all-time high. And why I say it's a good all-time high? Because the market checks this high that was made in the overnight, has upside extension. Right? There's no acceptance of higher prices here. A market give us excess. Actually, we have excess in the upper side. Right? We have excess in the upper side. very questionable lows, so there can be something to the downside. Now the thing is, many times when I say that, or when you hear something like that, the first instinct is, yeah, I gotta short this market because this market is going to break right now. I have to be short. Just wait. I mean, that's what I'm going to do. I'm going to wait. If there is anything actually, I want to wait until I see what's happening, what's really happening, or if some kind of thing can happen over the other, or whether the odds of one thing happening over the other. I have two so far. These two pieces of information I pointed the market downwards. Even three, right? First, excess in the upside. Second, we have a rally high here. We have a rally high and the market opened way below this high. Right? Way below this high. The second is a spike to the downside. The second is a spike to the downside. Right? And the market opening inside the spike kind of like is neutral, right? And the positive, those are the negatives. The positive, something that adds to the negative is also the weakness of this base, right? The base from where this rally can held or be hold or whatever. Those which is this one here and this one here and this one here. This is key for me. Same as this one in the upper side. And the positive is the market having the chance, having the opportunity to open with a gap to the downside and not doing that, right? That's very important. It did not, right? It had the chance to open with a gap. It did not open with a gap. It opened actually inside previous day range, which is an advertisement for chop and rotation. Let me expand this profile. Look at this highs here, high here, right from this high, settle, very mechanical selling going on here. Okay, but also remember what happened here during this day. Few, I'm talking about short-term traders, right? Few will remember this. How this? That's why I say the dynamics of this day or this overnight is very similar to what happened here, right? Some lot of buying happening around this area. I don't remember what was here. We have a distribution close here, for example, which is this one. Here, right? Which coincides with this low here. There's no downside. This day has a low exactly a POC over an POC, which is very questionable. Okay, I'm going to call this weak or questionable at a low here. It coincides, right? Coincides with this closing. This one. This also is questionable. Yeah. Questionable 18 low, 811 low. We have two questionable lows. Now today's last is 84. Let me move this higher because it's not here anymore. 84. Right there. Okay, settle. Up here. Late rally high. Let's change color. Let's do this because I think that's important. Late rally high. Previous week high. I don't know what the heck is this. It's 36. Okay. Now the distributions have been closed. The overnight distribution has been closed. Now, is there acceptance here? Notice the dynamic of this day over here. What happened here? Right? The market closes the distribution, right? Fails to have downside continuation, and then we have an upside. Now the same thing is happening now. The market has closed these overnight distributions. Let's see what happens next. If now the next thing, right? There's a lot of data here to observe. Sometimes I can fail for overthinking. I'll let you to be the judge. This is value here now, right? This is value. Current value is it's just one period, but it's almost now. It went from lower to overlapping lower, and if the next period starts trading inside yesterday, inside or above or the opening, it is highly likely that value is going to move inside. Value moving inside, it kind of like gives the shorts, less or more risk, okay? Increases the risk of the short. Okay, this is not that short anymore. It goes from 60 to maybe 50, well, which is not good. 60% to 50%, which is not good. Notice how the market has closed this distribution now. Now we have two bad numbers back to back. CPI. What about jobless? What about jobless claims? Let me check jobless claims. Initial jobless claims 2024. That was actually lower than expected. It was expected like 228. It's 224. Not bad though. What are you doing now? You got a long, you got a short. Are you watching? I'm having issues with my microphone here. All right. Yeah. My microphone is not working. I mean, I got away link. Heck, man. Microphone here it is. Additional headphones here. Microphone is captain, but what the heck? Okay, it's not good. Alright. Now many times we traders get emotional, right? I can see, for example, or I can say, if I recall how I opened the stream, is, you know, one of the key elements that I'm observing is the market having the opportunity to open with a gap and not doing so. Okay, and that increases the odds of some action to the upside. Okay, and then as the minutes pass by, you see the market going higher. Okay, that's in line with your thinking, with what your observations were, right? We have a tendency to have this feeling, right? This way of thinking. Oh boy, I should have gone long. And that is a setup for failure, because the next time you start watching the market and observing and having any kind of opinion on the market, as I did today, as the market opened, next time you have an observation, and it can be anything, right? You can say, okay, this market is too long, there's also rotation. Okay, since yesterday I was on the market trade or move in the direction that I thought it was going to, so now I'm going to go with my feeling. It is easy to fall for that. That's why I say it's a setup for failure. It increases the risk, really. It increases the risk to become emotional. It's really easy to fall for it. Now just have the process for me is, I learned this the hard way. The process is observation, thinking, observation. Right? I may have some mental trade here and there. I position myself mentally, and just keep observing, adjusting, just until something happens. And that's the thing, right? Wait, and until something happens, and we never know when something is going to happen. But what we can do is assess risk as the market develops. We assess risk, right? Yesterday, for example, when the market opened and I saw this market going higher, opening with the gap, with a big significant gap, I say this is a full error to be short in this market. I cannot be short. I'm not going to be short in the market that's making new highs. And the market traded to the lower side and closed this. I'm not going to be short in that kind of market, because it trades to the upside for me. And as the market started going higher here, it doesn't mean I was going to go high, because I saw these lows. I remember how this market traded here, what we have here. Just because I was assessing risk, the risk in the long side for me was high, even though I thought that the trade was to the upside. They told the markets to the upside. Yet I didn't take anything, because I thought that the risk is high. Another thing from yesterday, there is significant amount of volume here. Let me open this histograms here to show what I'm talking about. Can you see this 12,000, 14,000? this kind of absorption in the upper side when market rallies here, right? Rallies or goes higher and it just stops here. You know, it doesn't fall below that. It just the market starts to absorb any selling, any liquidation that happens there. That's also telling me something there. Right? That there are participants that are interested in keeping those prices. I don't know who is there. I don't know their intentions either, right? It can be somebody intending to keep the those markets, those prices, to do something during the overnight when markets are thin, or it's maybe longer time frame traders, longer time frame participants. Who knows? I don't know that. I just know that there is something here. Because those numbers, I don't see those numbers that often. Now, let's check what's going on here in the daily time, in this time frames that we are checking here. Second period is open. Now look at this. Now I'm going to duplicate this chart, this trend again. I'll kind of do it around about the same. This is the same pitch, right? This is to the upside, but this one is to the downside. And what I'm going to do, I'm going to move this one here now, right? Why? Because I just can't do that. And I saw this happening more when you see this kind of trading, mechanical trading happening here, and it is just logical. You know, when the market is going lower, they can do the same thing again. The weekly is still higher. The monthly, we have an outside bar. No, my bad. We don't have an outside bar. We have a trend 1, 2, 3, 4 months going higher. It is a daily time frame that has ended one time frame lower. Crude, dollar, gold, bonds. Boy, this market, man. This is starting to look like a short cover in here. This can be dangerous. You gotta be very careful here. There's a range you have in bonds here. Can you see? Now this has given us the edges. What about the other indices? How they are doing? Inside to the downside, downside. Has come to the downside, has come back in. Oh no, that's a yes. We'll see. Nasdaq is doing the same thing. Look below. Nasdaq look below. Russell also looked below. I can say maybe this is, with the exception of the Dow, they are in sync actually. Dow is neutral relative to yesterday, and there is potential to actually revisit the upper side here. You know, the upper side of yesterday's range. Look below, come back inside. There's actually potential here to check this high. Notice what's happening to value. It was here, right? Now what it is. Come on, man. Can you see? Now it is inside yesterday's. The short is not a good idea here. It really isn't. Look at these highs here. Very questionable highs here. Ookaroo, chip viewers on Strambo, remove the space at YMYQ No, thank you. I don't care about viewers. I'm not selling this. This streaming is a journal for me. It's not a business. I decided to keep the title Market's out of balance because the market was out of balance. It got out of balance and come back inside. Coming back inside targets the opposite side. Targets the opposite side of this range. Do you have any questions, comments? Please let me know. This reference is, once it's taken, you got to let it go. I'm going to keep this one. I'll keep it here. Why you want to short this market, man? Sometimes the risk is just too high, man, to do anything. It is better, and I got better. Sometimes, man, it's just the odds of being hard are high, and being silenced, having a zero positions, being flat is also a position. Remember that. As the market goes higher, the volume is lower. I'm going to take a break. If you have any questions, please let me know. I'll come back in a moment. This is very interesting here, what is happening, because what I see is tremendous, great similarities between this day and today. What worries me, or what makes me aware, what makes me hesitant to do anything right now, is it is really not that far, right? Not that far from just a couple of days after this. It can be, traders can remember that day, and the dynamics of this day, what I am seeing here, can be very, very similar to this one here. There is starting to differentiate now. There's starting some differentiation from that day. Because there is one thing here, this overnight inventory was short, and still volume is lower, and I don't know, but this can be a rebalancing on overnight long inventory. Still don't know that. We're never going to know for sure just until after the fact, right? We always have to risk something. But I think for me it was just not worth, right? The risk was too high. There were more pieces of information that were pointing downwards than outwards. There's only one piece of information that went to the upside, and was the market failing to open with a gap. It's interesting how this low is exactly value area high from Tuesday, if I use volume profiles. The data doesn't align with what the market is doing. But again, right, trades can go broke trying to short the market just because data doesn't line up, right? By the time the correction happens, you can be out of the market, right? You can run out of money just because you were trying to up from the correction. That's something really hard. There's something really hard to. That concept is really hard to absorb, to internalize. Oh, look at this. Look how dry is here. One contract here. This is many traders use this as a sign to short. In this case, to short, right? But this is how markets, how buyers dry, how buying dries here. It just doesn't find more buyers, and the market has to come back, right, to find more buyers at lower prices. It doesn't necessarily mean the market is going to keep going low. I don't have any position here. Most of the time, if you will find me doing the streams as flat, right? I guess I don't remember when, yesterday or before yesterday, I got a long in B. I got a couple of options there. Early in the session. But those are the exceptions. Those are not usually how how I behave. Okay, I think this market is now at the key level here. I must say a key level because they are right at the late rally high. I would consider, in other words, what I will do now is consider like the market is opening now. You know, all this inventory, all the overnight inventory has been dealt with. That was all business. So that was current business actually. That was current business. And now, what market can do relative to this? Notice what's happening to value now. Value is moving actually higher. Why is it cannot move this? Right? Value is actually moving higher here. I mean overlapping higher now. Volume is really low here. The key here, one of the keys here. No, check this out. I'm going to. I want to check. I want you to check this. Okay. This one. Notice how yesterday volume was lower, right? Lower until maybe 3 periods before the closing, when it starts to pick up and actually closes a little bit higher than the previous day. What happened in the last three periods are K, L, M. Weak, very questionable, low, L. Now the same thing is happening now with C. Notice what is opening, same thing that happens here. So I would say this is a continuation. You know, this could be a let me see if I can. How can I highlight this? Like I said, yeah, so we have trading, right? Trading going higher, which trading from point A to B, right? And then we have a parenthesis, A, B, we have a lot of stuff here. This is B, and this is the resumption of B, right? Towards the first point, you know, this is a parenthesis. What is this parenthesis here? This parenthesis is all that happened here. All that happened here and what happened here. That's how I am observing this market now. What I'm seeing here with C starting exactly at B half is the same that I saw here. You know, notice how we have J and K, basically balance there. The center of the range, or that little range, is L low, and that's being resumed now. Huh? Same resume. Late lagger trading happening here, and the potential destination being the opposite side, the opposite edge, the opposite side of yesterday's range. The market failed to open below yesterday. It corrects. It opens in one tick above this, corrects this weak lows, weak base. It leaves this one untouched. It leaves from this untouched. Have a significant reference in the lower side. And what we had today, this distribution close, is what is below now. Can you see? I'm watching value here. Watching value is higher. It's overlapping higher. The market now has a tone. That tone is to the upside. You have settled here, every computer now has green. All the computers are green now. We have seen Nasdaq, Russell, ES even down. Was neutral, was not negative, right? Let's see how they are developing now. Higher now. In the lower side, this is Nasdaq and ES are the only ones that are targeting the opposite side of yesterday's range here. Nasdaq also has closed this distribution. There can be something interesting here. Not this one, but this one here. But why you want to show this thing, right? This is overlapping value. It's really a tricky day here. Tricky day going on here. Seems like we are going to see, we may see some rotation here, meaning accumulation of value around or inside, or close to yesterday's high and low. Notice here what happens here. Remember when we're talking about this, how buyers just drive, right? The market has to retrace and find new buyers. It creates some value here. The market doesn't challenge or test this one. It did not challenge nor test this value here, but this is decreasing now. This is decreasing. It looks like it's short covering here, but just looking at this profile, right? And the thing is, many times, the market keeps going higher because short-term trading insists in provide fuel to the rally by shorting the market. Shorting this market is just add fuel to the fire here. Oh, something I just noticed. Look at where that all-time high is, right? The 6,500, right there, my man. Alright, unless you have any questions, I'm going to be calling it a day here for the stream. I'm going to keep watching this market. I don't know if you see anything. Alright. Have a wonderful rest of the day. Stay safe. Happy trading. Bye bye.